When people talk about personal finance, most of the time they talk about investing. They throw at you words like cryptos, bonds, stocks, ETFs, and when you're just starting out, that's confusing as hell. But the truth is that you're probably already investing without even realizing it. And the moment you understand how investing really works is the moment your financial life starts to change. So, what are investments really? Well, most people think that investing is something that just Wall Street guys do while shouting in a phone and wearing a suit. But the reality is that you and I make investment decisions every single day, even if we don't call them like that. Investing is just the act of using or giving up a certain resource now with the expectation or hope of gaining a greater return in the future, regardless of whether that return is in the same resource or another one that we value more. Let me give you a few examples. Choosing to spend 30 minutes a day working out is a time investment that might lead to a better health. Paying a babysitter so you're able to take some night class is a money investment in your future skills. Choosing to sleep 8 hours rather than doom scrolling is an energy investment in your mental clarity. The key idea is that we give up something valuable today in the hope of getting something more valuable tomorrow. When it comes to personal finance, investing means using some money now in order to have more in the future. But investing isn't just about making money. It's the foundation of building wealth. And that, of course, requires a strategy, not just vibes. So if there is one thing that you're gonna take from this video, let it be this. Every choice you make is an investment. And every investment is a trade-off. You give up something today in order to gain something tomorrow. And understanding exactly what you're trading off plays a key role if you truly want to make better decisions. So now that we hopefully understand what an investment is, let's explore the different types of investments and let's talk about how to choose the right one. And yes, I said the right one and not the best one for a reason. There is no such thing as a universally best investment. And if someone is trying to sell you that idea, walk away and do it fast. Rental properties, stocks, bonds, well, all these options exist because they balance different needs. What works for me might not work for you. The goal here isn't to find the perfect investment, but it's to find the one that fits your current situation and future expectations. But before we go deeper, there is something very important that you need to understand. Investing should be worth it. If you're giving up part of your hard-earned money now, the return you expect and that you're gonna get has to be meaningful. Let's not kid ourselves. The goal of investing is to make money. Sure, that goal might come with personal motivations, such as life freedom, security, providing for our family, but the core idea is always to build wealth. But let's get back to our framework. Every investment comes down to 3 main things: activity level, risk, and time horizon. Activity level means how much time and effort an investment requires from you. Basically, how active or passive that investment is. And keep in mind, what makes an investment more or less passive isn't the actual asset itself. What makes it active or passive is your approach to it. Let me make you an example with real estate. Buying a house to rent long-term is way more passive than managing an Airbnb. The asset is the same, but the commitment is very different. And the same applies with stocks. If I buy some shares and hold them for 20 years, I'm investing passively. And that's way different than day trading, which, by the way, I don't even really consider investing. Let me also point out that passivity is a spectrum. Even if I buy and hold, I still have to choose what to buy. Then I have to make the transaction, and then I also have to rebalance over time. But yes, on this channel, I will mainly focus about long-term investing. Yes, I know that I plan on becoming an entrepreneur, and starting a business is one of the most active investments imaginable. But when it comes to the stock market, I'm not a trader. And I don't believe most traders succeed because of skill, but that's for another video. I think we can stop with this back and forth now. Okay. So if you're looking for secret strategies or beat the market tactics, you are on the wrong channel. I'm here to show you real, achievable returns that won't make you a billionaire. Let's go back to the video. The second concept is risk. Every investment involves risk. There is just no return without it. And yes, even keeping money on a saving account actually carries risk. First of all, inflation is slowly eating away your purchasing power. But also, your account could be blocked, your bank could fail, many things could happen. I know it sounds scary, but don't worry, because risk isn't necessarily a bad thing. One of the best tools we have against it is diversification, which is spreading your investments across different assets. And don't worry, I will cover it in a future video. The key is to understand your own risk tolerance, based on your age, your goals, and your overall financial situation. The goal here isn't to risk everything you've got. The phrase "only invest what you can afford to lose" is misleading. You're always risking something. Time, opportunity, growth. You just need to figure out what you're willing to risk for the return you want. Third aspect about investments is time horizon. And just like risk, time horizon is crucial. And yes, it's probably one of the most underrated concepts in investing. You can't just plant a tree and expect apples tomorrow. Trees don't grow overnight, and neither does your money. True investing takes time. If you want real gains, you need a long-term horizon. We are talking years, decades. Anything shorter than a couple of years, and that's not investing. That's speculation. And speculation isn't necessarily bad. Buying some crypto or betting on a startup is fine, as long as it's a small part of your portfolio, as long as you understand the risk, and as long as you don't mistake it for a wealth building plan. Remember, no one, not you, not me, not the gurus, no one can predict short-term market moves. Your strategy should focus on long-term growth. The longer your time horizon, the more you can weather the ups and downs, and the more compound interest can do its magic. So, just to recap, what did we learn today? First, we learned that investing means giving up something now in order to get something later. Then we understood that there is no such thing as no risk, but also that risk can be managed. We then also talked about the fact that every investment has an activity level, a risk profile, and a time horizon. So, this video is just the start to a bigger journey. In the next episode, I'm gonna show you how to calculate investment returns so that you can actually compare options, make smarter decisions, and think like a long-term investor. If this was helpful, please consider subscribing, hitting the like button, and sharing this with someone who could find it helpful. I thank you for watching and see you in the next video. Bye. Oh, I'm so sweaty. Can you see it? I need to cut my hair. Yeah, I really need to cut my hair. But look at this. Oh, as usual, I forget. I might include this. Yeah, as usual, I forget the thumbnail, which I have to do more like this. So there is space here, so yeah. It's so embarrassing. Oh, what the fuck. But it would be funny if I would include this in a video. I might think about it. Yeah, I just don't know what the This is so embarrassing showing you this backstage. It's probably the most embarrassing part of all. So yeah. Again, if I'm gonna include this in the video, thank you for watching and I hope you appreciate this more genuine part. Let me know if you would like. I was thinking, like at the end of the year, I could make a compilation of all like the bloopers that I make, but I don't usually have many, because like instead of talking or reacting to me doing something bad, it's my inner self that gets angry. And yeah, they're mostly in Italian, because I swear, but I do it in Italian, so I don't know how much you could understand about it. But yeah, I think this video about investments can end here. Yeah, thank you for watching. Bye.